In this video, a deep dive into the U.S. Social Security system, how it works, the credits you need to qualify, and what kind of benefits you can expect depending on how many years you've worked. We'll even look at example numbers comparing the minimum 10 years of work needed to qualify versus if you invested the maximum into the system, 30 years plus. And this is something that I've been investigating because you may know that you need to pay at least 10 years into the Social Security system to qualify for benefits. But you can obviously work 10, 20, 30, 40 years, pay into the system 40 years. And the question becomes, is it worth it to pay into it for 30, 40 years or just to pay into it for the minimum of 10 years? Because if you're an entrepreneur, there are ways to actually get around paying into Social Security by having an offshore company and things like that. So that's what we're kind of investigating, or at least that's the perspective we're coming from into this video. So we'll do a deep dive on what Social Security is and make some comparisons so that you have a better understanding so that you can make an educated decision in terms of a cost-benefit analysis that will allow you to guide how you're going to take things in the future. So let's start with, what is Social Security? Essentially, it's a government program designed to provide financial support in retirement, as well as benefits for disability and survivors, which is key as well. It's a system that works by taking payroll taxes from your income while you're working, which funds benefits for you when you retire or when you need them. However, not everyone is automatically eligible. You need to work and pay into Social Security for a certain amount of time to qualify for these benefits. Okay, so how do the credits work? To qualify for Social Security benefits, you need to earn at least 40 credits. So what is a credit? Well, credits are based on how much you earn and pay in Social Security taxes. Since 1978, you can earn up to 4 credits per year. In 2024, for every $1,730 you earn in wages or self-employment income, you get 1 credit. That means to earn the maximum 4 credits for the year, you'll need to make $6,920 in covered earnings. Pretty low bar, honestly. So to get those 40 credits and be eligible for benefits, you need to work for at least 10 years. Because you get a maximum of 4 credits per year, and then, so 10 years to get to 40 credits. So you need to qualify for Social Security, you need to earn at least 40 total credits. Now, here's something important. The number of credits you earn does not affect the amount of benefits you'll receive. You could have 40 credits or more, but what really determines your benefit amount is the average of your earnings over your working years, not the total number of credits. Think of credits as a way of proving you've contributed into the system to qualify for the benefits, and the more years you work and the more you earn, the higher your monthly benefit will be in the future. Make sense? So you might ask, and I certainly ask, what if you only work 10 years? What if you only pay in for 10 years, which is the minimum? You only work the minimum 10 years and earn just enough to get 40 credits. So you'd qualify for benefits, but your monthly payment will be on the lower end because Social Security averages your earnings over 35 years. And zeros will be factored in for the remaining 25 years where you didn't have income. Okay, so it's averaged over 35 years, and if you only pay into it for 10 years, then you'll have 25 years of zeros. So let's make an example. So let's say you earn around $50K a year for 10 years. According to Social Security's formula, this might give you a monthly retirement benefit of around $800 to $1,000 when you start collecting at your full retirement age of 67. But what if you worked for a full 35 years, earning the same $50,000 per year? Your benefit would be much higher, potentially around $2,300 to $2,500 per month. That's a big difference, right? $800 to $1,000 versus $2,300 to $2,500. The more you work and the more you earn over those 35 years, the better your retirement benefits will be. And then the math becomes, you got to sort of do the mathematical formula of, the time value of money and see, is it better to maybe skip out on paying 25 years into the system, keeping that money, compounding that money yourself, versus getting that money when you turn 65, 67, and having that higher benefit and sort of doing the math of how much will I get, or what's the current expected value of those future benefits. Okay. The Social Security Administration calculates your benefit using your highest earning 35 years of work, by the way. So if you don't have 35 years of work, the missing years will count as zeros, as we mentioned, which pulls down your average earnings. Here's another example to break it down. If you work 10 years and earned an average of $50,000 per year, your average earnings would be lower when spread over 35 years because the remaining 25 years would be zeroed out. On the other hand, if you worked a full 35 years with the same average income of $50K, your average would remain at $50K, resulting in a higher monthly benefit. In short, the longer you work and the more you earn, the more you'll get in retirement benefits. Working the minimum 10 years qualifies you, but you won't get as much as someone who worked longer. But obviously, if you made, say, $160,000 a year versus someone that paid in $50K every year for 3 years, you actually average out to more because 160 divided by 3 is more than 50,000, right? So there is a bit of a math here. Let's also talk about disability benefits. As a quick side note, so to qualify for Social Security disability insurance, you must meet both a recent work test and a duration work test. The exact number of credits you need depends on your age and when you become disabled. For example, if you became disabled before age 24, you need 6 credits earned within the last 3 years. If you're between 24 and 31, you need credit for half the time between age 21 and the age you became disabled. If you're 31 or older, you generally need 20 credits from the last 10 years of work. Okay, I know it's hard to think that you might become disabled in the future, but it's important to understand that. But honestly, it's a pretty low bar. Only 10 credits from the last 20 credits in the last 10 years, but each year gives you 4 credits. So you really only need to work 5 years in the last 10 years to qualify if you're over age 31. So that's not bad. And then let's talk about survivor benefits, another big benefit of Social Security. So the number of credits needed for survivor benefits depends on your age when you die. A special rule allows your children and spouse to receive benefits even if you've only had 1.5 years of work in the last 3 years before your death. No one needs more than 40 credits to be eligible for survivor benefits, okay? So either it could be, 6 credits in the past 3 years or 40 credits total, right? So if you've worked for at least 10 years and earned the minimum 40 credits, then your family will get the survivor benefits as well. And if you don't meet the 10 years of work, there's still kind of that other threshold of 1.5 years of work in 3 years before your death. Cool. So to wrap it up, you need 40 credits, usually by working for at least 10 years, to qualify for Social Security retirement benefits. However, the more years you work and the more you earn, the higher your monthly payments will be. If you only meet the minimum 10 years, your benefit will likely be on the lower side unless you were really, really high earning, but it's still something to build on for your retirement. Thanks for watching. If you found this video helpful, please be sure to give it a thumbs up and don't forget to subscribe to the channel for more content on retirement with dignity, living in Latin America as well, by the way, we cover a lot. And how this kind of flows in is we notice that a lot of Americans aren't saving enough for retirement, right? And they're doing the math, and they're either saying, I need to get back to work, I need to make more money, I need to move to a lower cost region. And so a lot of American retirees are actually moving to Latin America. They're moving to Mexico, they're moving to Panama in order to lower their cost of living, have a equally high or oftentimes much higher standard of health care, and they're able to retire with a lot of dignity, right? Because maybe it costs, who knows, like so much money in the US to retire, and also some things like elder care or retirement homes in the US are just absurdly expensive. Whereas you come down to Latin America, you go to Panama, you go to Mexico, you go to Ecuador, and elder care is super affordable. Retirement homes are super affordable. Rent is affordable. Food is affordable. Healthcare is affordable. Health insurance is affordable. And so that's what we do at MyLatinLife, is we help retirees, families, and individuals relocate to Latin America, either as a plan A or as a plan B, something that you could set up now with the intent to maybe take more full advantage of it in the future when you retire, if you're not quite at retirement age yet, but it's still something you want to start planning for and maybe obtaining your visa now. So whatever your situation is, you can book a call with MyLatinLife. There'll be a link in the description of this video. You can book a call with us directly, and we can start putting a plan together for what retirement in Latin America is going to look like, and start setting some concrete steps and think about things very holistically so that you have options. Cool. So book that call if that's interesting to you, and catch you in the next video.